Good morning, everyone, and welcome to the Daily Trader with Kevin Hinks. I've got two paper money trades for you today on two high-profile names. We're going to look at Tesla, who has earnings coming up. We're going to look at Meta Platforms that has earnings coming up and is currently in a trial right now that we're waiting for some type of news on at any moment, frankly. So let's get to our first trade of the day, and that is Tesla. Now, Tesla has earnings April 22nd. That's next week, right? So you have to be cognizant of that when you put on these trades going in. So you look at the expected move for next week, it's right around $30 is the expected move for the week. That may not be the one-day move, but it's for the week. So what I looked at here is a May 2nd, so just 1 week out, and then selling the May 25th, buying the 250 call in the May 2nd expiration, selling the 280 call in the April 25th. I put that in around 990. Tesla's probably sold off a little bit. It's 960 now, so slightly lower than that. But this is a trade that sells the higher implied volatility in the April 25th expiration, buying the 1 week out, which doesn't mean you're going to be successful, but you're selling the higher volatility and buying the lower volatility. Here's the numbers. Selling right now, you're selling 101.6 implied volatility and buying a 95.6 volatility. So for a $30 call diagonal, you're paying $9.90, $9.60, which is based on wherever it's trading, but only about a third of the amount of the strikes. Now, again, the risk on this trade is the debit paid. The target with the expected move is around $280. That's what you're looking for a move to. Remember, Tesla's earnings come out on the 22nd of April after the bell. So there's a play that will take you into the earnings event in Tesla. And hopefully the stock will move towards that $280 strike. Again, the risk is whatever the debit paid is. All right, the second one, Meta Platforms. Now, Meta Platforms, if you look, this stock has sold off quite a bit lately, and they are currently in a trial fighting to keep Instagram and WhatsApp in the Meta Platform family. So you're watching for some type of negotiation or settlement or something that resolves that situation. So in a similar but different, and this time I went out and bought the May 9th expiration, the 505 call, which is about $5 out of the money because the stock has moved down slightly. Buying the 505 call, looking at the expected move for next week when they have earnings on April 30th. So you're not at the earnings yet. The earnings, that's why I'm buying the May 9th, because the earnings event will be the week after that in the May 2nd week. So Tesla has earnings next week, Meta the week after. You're getting into large cap tech kind of earnings season. So again, bought the May 9th 505 call, sold the April 25th next week 535 call. The expected move for next week to April 25th, about $30. So buying the 505, selling the 535. That's trading about $25 is where we put in, trading under $24 now, about $23.75. So less than it was as the stock has backed off. So again, in a trade like this, you are looking for a move towards that short strike of 535. Remember, Meta just hit, not very long ago, a high of $740. So you're pretty significantly off those recent highs. Buying the 505, selling the 535, paying about, I put it in $25, trading about $23.75 now. That's the risk. Whatever the debit paid is the risk. And you're looking for a move towards the 535 strike by next Friday. And it will give you an opportunity, because if you notice, it's a 2-week spread, to extend duration into that earnings event, similar to the trade that we have on in Tesla, but next week, right? All right, that's our show for today, everyone. 2 plays focus on the upside in Tesla and in Meta Platforms. You would do these if you were bullish on those names, 2 call diagonals. Have a great weekend, everyone. We'll see you next week with another edition of The Daily Trader. I'm Kevin Hinks.